Hello everyone, welcome to my channel hdorionn. We are studying accountancy for class 12th from T.S. Grewal's textbook 2023 edition, Accounting for Partnership Firms, Chapter 4, Admission of a Partner. And in this video we will study adjustment of old partners' capitals on the basis of new or incoming partners' capital. So let us see some questions from the textbook. So let us proceed. Question number 79. Kalpana and Kanika were partners in a firm sharing profits in 3:1 ratio. They admitted Karuna as a partner for 1/4 share in future profits. Karuna was to bring rupees 60,000 for his capital. The balance sheet of Kalpana and Kanika as at 1st April 2023, the date on which C was admitted, C here means the new partner Karuna was admitted was, here is the balance sheet given, and capitals of Kalpana is 50,000, Kanika rupees 80,000, outer column 1,30,000, general reserve of rupees 10,000, creditors of rupees 70,000, land and building rupees 40,000, plant and machinery rupees 70,000, stock is of 30,000 rupees, debtors 35,000 minus provision for bad and doubtful debts rupees 1,000, in the outer column it is 34,000. Investments of rupees 26,000 and cash of rupees 10,000. Total is rupees 2,10,000. Fine. And reading the question is very important, and remembering the information till you have finished the solution, that is equally important. Fine. So it will be better that you remember the details of the question precisely and use it in your solution. Otherwise, looking back again and again in the question, so practice this and get it to your comprehension. That is also equally important. Without understanding the question properly, the solutions may be difficult. The other terms agreed upon were: goodwill of the firm was valued at rupees 24,000, land and building were valued at rupees 65,000, and plant and machinery at rupees 60,000. A provision for bad and doubtful debts was found in excess of rupees 400. So here 1,000 there is, and you have to reduce it by 400 and make it 600. Fine, only 600 provision is required. A liability of rupees 1,200 included in sundry creditors was not payable. The capitals of the partners be adjusted on the basis of Karuna's contribution of capital to the firm. Excess or shortfall, if any, be transferred to current accounts. Prepare revaluation account, partners capital account, and balance sheet of the new firm. Now this question is also similar to the previous questions we have solved, and I hope that you are watching all the videos precisely and listening to the explanation. That will help you understand the concept very well, and gradually you will see that you are preparing for any other competitive exams other than the CBSE exams. So don't miss this opportunity and take full advantage of this channel. Revaluation account for question number 79. And in point B, land and building is increasing by 25,000. So by land and building, we know that increase in asset or decrease in liability is to be written on the credit side, and reverse, decrease in asset and increase in liability on the debit side. So when the land and building are increasing, land and building is increasing, earlier in the balance sheet it is 40,000, now it has it is up by 25,000. So the difference in amount 65,000 minus 40,000. But plant and machinery is decreasing by 10,000. So to plant and machinery, the difference amount is how much? 10,000. Then provision for bad and doubtful debts is found 400 rupees in excess. So that is decrease in liability. So by provision for bad debts, it is 400. Simple, I should write. Then there is a liability which is not to be paid. So creditors are decreasing by 1,200 rupees. And this is all. Only this much information. And we have discussed the revaluation account in all my previous videos. and therefore we need not to go into much detail of revaluation account in every video and in every question. You see, some of you may ask me that it is not discussed well in this video, but look at the previous videos, or in all those videos, especially in the video which was dedicated to revaluation account and all. This concept was very much discussed in detail, and I try my best to give it to you in every video. And here you see the total is 26,600. The difference amount is rupees 16,600. We get a credit balance, so it is a profit. So if you get a balancing figure on the debit side, it means it is a profit, and if it is on the credit side, then it's a loss, and it will be given to the old partners in their profit sharing ratio, that is 3:1, Kalpana and Kanika. Breaking this, it is 12,450 and 4,150. Now, because it is a question related to adjustment of capital, let us talk about the closing capital balances of the new firm first, and then we will draft or prepare a capital account. Fine. So, Kalpana and Kanika. Kalpana is to Kanika is equal to 3:1. And a new partner Karuna. Karuna is joining for how much portion? 1/4 portion in the profits of the firm. So what will be the new profit sharing ratio? We will have to calculate. See that after giving 1/4 to Karuna, new partner, remaining profit is 3/4, which will be distributed to the old partners in their old profit sharing ratio. So Kalpana, this 3/4 will be distributed in the ratio 3/4. 3/4 into 3/4. And Kanika, 3/4 into 1/4. And Karuna, we know portion is 1/4, but in the denominator we are getting how much? 16. Here also 16, here also 16. So in order to make this 16, we have to multiply and divide it by a number which is 4. So it becomes now 4/16. Because the denominators are same, and therefore the numerators are the profit sharing ratio, that is 9:3:4. So this is the new ratio, and we have to keep the closing capital balances of the partners in new ratio based on Kanika's, based on new partner Karuna's capital. Karuna's capital is how much? Karuna's capital is 60,000 rupees. It is 60,000 rupees. Fine. Now, if 4 represents 60,000, how much will 3 represent and how much will 9 represent? Very simple to calculate. Even by simple observation also you can get the amount correctly. Fine. But for your understanding, let me solve this, give logic to this. If it is 4x and this is 60,000, it means it is how x is equal to how much? 60,000 divided by 4, which is equal to rupees 15,000. That is x, the value of x. Why have you calculated the value of x? Because we want to find out the closing capital balances of the old partners. Now this person is having how much? 3x. So 3x will be how much for the for partner Kanika? It will be 3 multiplied by 15,000, which is equal to rupees 45,000. Fine. And how much will 9 represent? Which amount? So it is 9x. 9x will be how much? 9 into 15,000. It is 1,35,000. So in this way, we get the closing capital balances which we have to maintain in partners capital account. Or there can be, as I said, you can see these things just by observing and by mental mathematics. But if you find it difficult, one should practice and get smart in this, because paper and pen will take time. But mental calculations, in that you will be quick and smart, and you will save time, which will be equivalent to scoring more marks. And here 3 and 9, it is whatever you get for Kanika multiplied by 3 to get what's that, 3 times. 3 into 3 is 9. So if you multiply 45 into 3, then also you will get 135. So that way you have to be smart in calculation, and the more you put into practice, more you put yourself into practice, the smarter you will get in your calculations and making or preparing the answers in lesser time. Now let us go for partner's capital account. And one more thing one should notice here is that the old ratio is 3:1, and in new ratio also the old partner's ratio is 3:1. You divided by 3, you will get 3:1. So it is same. So in this case also sacrificing ratio will be our old ratio, that is 3:1. Several times we have discussed this concept in the videos, and I know that you know it, but still for those who have joined recently, they should know this. Fine. So this will save your time. Again, you don't have to take a pen and paper to calculate sacrificing ratio for treatment of goodwill. So this is a smart way to understand this thing. In partner's capital account, first we will write the balance brought down as given in the balance sheet, which is 50,000 and rupees 80,000. Then there is general reserve also in the balance sheet, which will be paid to the partners in their old profit sharing ratio, that is 3:1. So 10,000 broken in this ratio is 7,500 and rupees 2,500. Then revaluation profit is there. So by revaluation, just now we have calculated rupees 12,450 and rupees 4,150. New partner is bringing in cash for his portion of capital, which is 60,000 rupees, and premium for goodwill. So buy premium for goodwill in sacrificing ratio, that is 3:1, we have calculated. And the portion of goodwill is how much? Goodwill of new partner is, out of 24,000, 1/4 is Karuna's. So it is 6,000 rupees. Then 6,000 has to be broken in the ratio 3:1, that is sacrificing ratio, to compensate the sacrificing partners. So 6,000 broken is 4,500 and rupees 1,500. Now the capital to balance close down. This has to be in the new profit sharing ratio, that is 9:3:4. When 60,000 is, when 4 stands for 60,000, 3 will be 45,000. Just now we have calculated here, and 9 is 1,35,000. Now we have to balance this, and the difference, wherever we get the difference, either in the debit side or in the credit side, it will be maintained by opening current account, because it is asked in the question to do that. If nothing is said, then we can maintain cash account, but here current account. So by observation we can see that the debit side portion for Kalpana is more, so 1,35,000 will prevail, and the balancing figure, after subtracting these four amounts, we get the balancing figure rupees 60,550. So by current account of Kalpana, 60,550. So it is showing a debit balance, so it will be written in the asset side of the balance sheet. Fine. Here by observation we find that this side is heavier, it is 88,150. And the balancing figure will be on the debit side. So current account of Kanika is 43,150. So this way the current account is opened. It's a credit balance, and therefore in the liability side of the balance sheet. This is debit balance, therefore on the asset side of the balance sheet. And Karuna is 60,000, 60,000. Let us move on to balance sheet. Now balance sheet of the new firm. First we will write capitals of Kalpana, Kanika and Karuna. The closing capital balances 1,35,000, 45,000 and 60,000, which is in new profit sharing ratio, and total is rupees 2,40,000. Then general reserve we have distributed to the partners. Creditors are of rupees 70,000, but it is reduced by rupees 1,200, need not to pay, so 68,800 in the outer column. Then Kanika's current account is having 43,150. It's a credit balance in the capital account. Then come to the asset side. Land and building increased by 25,000 to 65,000. Then plant and machinery decreased by 10,000, and from 70,000 it has decreased by 10,000, so it is 60,000. Then stock, no change in the value of stock, rupees 30,000. And debtors 35,000 less provision of rupees 600. Earlier it was 1,000, now it has come down to 600, and in the outer column it is 34,400. Then investments, no change in the value of investments, rupees 26,000. Then cash or bank, earlier balance is 10,000 plus new partner has brought capital of rupees 60,000 plus 6,000 as premium for goodwill, therefore it is 60,550. Now the grand total is 3,51,950. So is the solution. Now let us see question number 80. A and B were partners sharing profits and losses in the ratio of 3:2. Their balance sheet as at 31st March 2018 was as follows. Capital of A rupees 1,04,000, B rupees 52,000, it is 1,56,000. Then creditors rupees 1,54,000, employees provident fund rupees 16,000, workmen compensation reserve rupees 10,000, and contingency reserve is of rupees 10,000. To the asset side, we have got cash of rupees 8,000, sundry debtors rupees 37,600 minus 1,600 provision for doubtful debts in the outer column, 36,000. Stock rupees 60,000, prepaid insurance rupees 6,000, plant and machinery rupees 76,000, building is of rupees 1,40,000, and furniture is of rupees 20,000. Grand total is rupees 3,46,000. Then after this, what happened? C was admitted as a new partner and brought rupees 64,000 as capital and rupees 15,000 for his share of goodwill premium. The new profit sharing ratio was 5:3:2. On C's admission, the following was agreed upon. Now one should see here the old ratio and the new ratio. See, this is the old ratio and this is the new ratio of the old partners. They are different. It is 3:2 and it is 5:3. Therefore, it will be better we calculate sacrificing ratio for the treatment of goodwill, because it will not be the same as the old ratio. Some different ratio will come. Fine. So it's therefore you need to work on this. It's a little working note you can prepare in short. Otherwise, old ratio sometimes becomes the sacrificing ratio. So in that case, our calculations are reduced. So what are the terms agreed upon? Stock was to be depreciated by 5%. Provision for doubtful debts was to be made at rupees 2,000. It is 1,600. Now it is to be increased by 400 rupees. Furniture was to be depreciated by 10%. Building was valued at rupees 1,60,000. Now this much is the regular thing which each and every question carries. So fine. And if the question is of 6 mark, then in revaluation account itself by preparing it correctly, you may get 2 marks. So it is not that difficult to score. It is not at all difficult to pass an exam. What is difficult is to score your good marks. So you see, revaluation account, hundreds of revaluation accounts you will prepare, and you will be able to prepare a revaluation account correctly also, fine, with a little effort, and that will save your time also. You have scored also. And then let us say next 2 marks is for preparation of partner's capital account. Half the capital account you prepare correctly, then in the balance sheet, the revalued balance sheet is there, so it is easy there also. So in this way, it is not at all difficult to score good marks. Fifth point is the thing, or it is something different than the other questions. In this section, we are discussing adjustment of capital, and this point is related to that. Capitals of A and B were to be adjusted on the basis of C's capital by bringing in or paying off cash, as the case may be. So in the previous question, we maintained current account, but now here it is asking to maintain it in cash account, means by bringing additional capital or by withdrawing the capital. Prepare revaluation account, partners capital account, and balance sheet of reconstituted firm. Solution 80, revaluation account. As suggested in the question, stock is depreciated by 5%. So we know that decrease in asset or increase in liability to be written on the debit side. So to stock, 60,000's 5% is rupees 3,000. Then provision for bad and doubtful debts. So to provision for doubtful debts, from 1600 it is to be increased to 2000 rupees. So there is a jump of increase in liability of rupees 400. Furniture is also depreciating. To furniture, 5%, 20,000's 5% is rupees 2,000. But building is appreciating. So increase in asset or decrease in liability we have to write on the credit side. Building is increasing by rupees 20,000. From 1,40,000 it has now come up to rupees 1,60,000. Now that much only. So grand total credit side is more 20,000, and it is more by rupees 14,600. So it's a credit balance which is a profit. So to profit on revaluation, it will be given to the partners, old partners, in their old profit sharing ratio, that is 3:2. And who are the partners? A and B. So break this, you get rupees 8,760 and 5,840. Now we will move on to partners capital account, and in that premium for goodwill, treatment of goodwill we have to see. So let us calculate premium for goodwill. See, A and B's ratio is 3:2, and after joining of C, the new ratio has become 5:3:2, and sacrificing ratio is old ratio minus new ratio. For A, old ratio is 3/5 minus new ratio is 5/10. LCM is 10. 6 minus 5, that is equal to 1/10. And for B, because the old partners will only sacrifice, new partner cannot sacrifice, he has come to gain, and it is 2/5 minus new ratio is 3/10, which is 10. In the numerator you get 4 minus 3, that is 1/10. So sacrificing ratio is 1:1. And premium for goodwill brought in by partner C is how much? 15,000 rupees. So this 15,000 rupees will be paid to A and B equally, that is 7,500 each. Partners capital account by balance brought down, it is 1,04,000 and rupees 52,000. Then there is workmen compensation reserve, against which there is no claim in the question. Fine. So entire amount 10,000 will be given to them in their old ratio. So 10,000 in 3:2 will be rupees 4,000. So this is workman compensation reserve. To compensate the workers, uh, the firm has made a reserve, and similarly by contingency reserve. Contingency reserve. What are contingency reserves? Contingency reserves are those reserves which are kept aside for happening of some events. So if that event happens against the firm, then the firm will have to compensate them. Fine. In that way, a reserve is created. For example, there is a court case against the firm, and if the firm loses, the firm has to pay compensation to the other party. But if the firm wins, then the firm need not to pay any compensation. So there are chances that if the case is lost, then the firm will have to pay the compensation to the opponent, and therefore for that reason contingency reserves are created, and which is used for some events in the future, happening of some events in the future if it goes against the firm. But here there is no claim, and therefore this contingency reserve 10,000 will be given to the partners in their profit sharing ratio, old profit sharing ratio. You see, the balance sheet belongs to the old partners, so any undistributed profit will not be shared with the new partner. It is the first day of the new partner in the firm, so such things are illogical also if we share with the old new partner. Everything belongs to the old partners from the balance sheet. Then revaluation profit is also there. By revaluation, it is 8,760 and rupees 5,840. What more? By bank, new partner is bringing rupees 64,000 as his capital, and by premium for goodwill. And here the sacrificing ratio is how much? 1:1. How much premium has he brought? 15,000 rupees. So broken in the ratio 7,500 each. Now we know that the closing capital balances of A and B is to be made in profit sharing ratio based on new partner's capital. So here 2 balance closed down. In which ratio? 5:3:2. Fine. 2 represents 64,000. Then how much will 3 represent? How much will 5 represent? So the same thing, let us say 5x is to 3x is to 2x. If 2x is 64,000, therefore x is equal to 64,000 divided by 2, that is equal to 32,000. And 3x is how much? 3 multiplied by x is 32,000. 32,000. So it is 96,000. And 5x is how much? 5 multiplied by 32,000, that is equal to rupees 1,60,000. So these are the closing capital balances of the partners. So it is 1,60,000, 96,000 and rupees 64,000. Now we will close the capital accounts, and the balancing figure will be maintained in bank or cash account. Fine, I will write here cash also. Cash or bank will be together maintained. So here it is 1,60,000. Just by observation, we know that the debit side is more and credit side is less. So A is supposed to bring rupees, how much? Let us calculate. Rupees 27,740. Okay. Now B, 96,000. By observation, debit side balance is more, and therefore when we subtract all these items including this goodwill, you will get a figure here, and that is 22,660. And for partner C, everything is fine. So this is what money brought in by old partners to make their new capital balances of rupees 1,60,000 and 96,000, which is in new profit sharing ratio. Now let us prepare the balance sheet of the new firm. In the balance sheet, let us write capitals first of A, B, and C. The closing capital balances as we have calculated just now, and total of which is rupees 3,20,000. Now from the old balance sheet there is creditors, unchanged creditors. It has not changed. The value is same. And employees provident fund. Employees provident fund. Provident fund is of rupees 16,000. It belongs to the employees, and therefore we cannot distribute it to the partners. Fine, it is a liability. Then to the asset side we have got cash or bank together. We will maintain. Earlier in the old balance sheet there is a cash balance of rupees 8,000, and the new partner brought rupees 64,000 as capital and rupees 15,000 as premium for goodwill, which is retained in the business. And in order to maintain these closing balances, the partner A has brought rupees 27,740 and partner B has brought rupees 22,660, which will result in a cash balance of rupees 1,37,400. Then sundry debtors. Sundry debtors are of rupees 37,600, and there is a provision for bad debts of rupees 2,000 made. It is 35,600 in the outer column. Then stock. Stock was rupees 60,000. Now it has decreased by 5%, so 57,000 minus 3,000. Then prepaid insurance. No change in the value of prepaid insurance. Actually this is a type of asset which cannot be changed easily. You see, prepaid means for the insurance you have paid the money and you will never get the money back. Fine, so it is rare that prepaid insurance, or it is impossible next to. Plant and machinery. No change in the value of plant and machinery, rupees 76,000. Then building. Building has increased by 20,000 rupees from 1,40,000 to 1,60,000. And finally furniture. Furniture of rupees 20,000 is now at rupees 18,000. Grand total is 4,90,000. So this is how the question is to be solved. Now let us discuss question number 81. The balance sheet of X, Y, and Z, who share profits and losses in the ratio of 3:2:1 as on 1st April 2023 is as follows. To the liability side, capital X rupees 1,75,000, capital Y rupees 1,50,000, and Z rupees 1,25,000. Total capital is rupees 4,50,000. And current account is also there. It means the question is suggesting that the capital accounts are kept fixed. It is not fluctuating. Therefore, all the treatments will be done through current account. Current account of X is rupees 4,000 and that of Z is rupees 6,000. These are the credit balances, and therefore, whereas debit balance of current account Y's current account is debit balance rupees 7,000. General reserve of rupees 15,000. Profit and loss, that is the undistributed profit of previous years, is rupees 7,000. Creditors rupees 1,25,000. To the asset side, we get land and building of rupees 1,75,000, plant and machinery of rupees 67,500, furniture rupees 80,000, investment rupees 36,500, sundry debtors rupees 60,500, and stock rupees 1,37,000, and bank rupees 43,500. Grand total is rupees 6,07,000. Yes. Now further the question says, on the above date, W is admitted as a partner on the following terms. W will bring rupees 50,000 as his capital and get 1/6 share in the profits. He will bring necessary amount for his share of goodwill premium. The goodwill of the firm is valued at rupees 90,000. So 1/6 of 90,000 amount will be brought by W as premium for goodwill. Fine. That is 15,000 rupees. New profit sharing ratio will be 2:2:1:1. So this old ratio is not same. It has changed. So we will calculate the sacrificing and gaining ratio. A liability of rupees 7,004 will be created against bill receivables discounted earlier from other bank but now dishonored. So there is a dishonored bill receivable which is dishonored. So we will do the adjustment for this. Point E, the value of stock, furniture and investment is reduced by 20%, whereas the value of land and building and plant and machinery will be appreciated by 20% and 10% respectively. Capital accounts of partners will be adjusted on the basis of W's capital account through current accounts. So let us see the detailed explanation of this in the solution part. Solution 81. First we will prepare revaluation account. So there is a bill receivable which was discounted with the bank, but now it has been dishonored. So what will be the journal entry? Journal entry will be debtors account debited to bank. It means debtors will increase and bank will decrease. So we know that increase in asset or decrease in liability we have to write on the credit side, and decrease in asset or increase in liability we have to write on the debit side. So bank will be decreased by rupees 7,004 and debtors will be increased. You cannot write here bill receivable because bill receivable was already credited and closed at the time when you discounted the bill. So debtors will increase and bank will decrease. That is the first adjustment. And then stock, furniture and investments are decreasing by 20%. So assets are decreasing to 2 stock and 2 furniture and 2 investments. They all are decreasing by 20%. So it is 27,400, then 16,000 and rupees 7,300, 20%. And land and building is increasing. So buy land and building 35,000. It is increasing by 20%. And plant and machinery is also increasing. Plant and machinery, from their book value it is increasing by 10%. So 67,500's 10% is 6750. Now by observation we see that the debit side is more. It is 57,704. To make it same, we have to insert an amount of rupees 8,950. It is a debit balance. It is a loss on revaluation, and it will be given to the partners, old partners, in their old profit sharing ratio, that is 3:2:1. So X, Y and Z. 4,475, 2,983 and rupees 1,492. Now let us calculate sacrificing or gaining ratio for treatment of goodwill. We know that there were 3 partners before, X, Y and Z, and their profit sharing ratio was 3:2:1. And now there is one more partner, W, and the new ratio is 2:2:1:1, because the old ratios of old partners are not the same, and therefore we will calculate sacrificing ratio, which is old ratio minus new ratio. Very simple. For partner X, old ratio is 3/6 and new ratio is 2/6. Denominators are same, and therefore 3 minus 2, that is equal to 1/6. See, from here the first step itself you can understand that whatever portion of profit X is sacrificing is the same portion of profit the new partner has gained, 1/6. It means you need not to proceed ahead. for calculation, because entire portion is contributed by partner X to in favor of W. I hope you are understanding. W's portion is how much? 1/6, and X has sacrificed 1/6. So it is done then. Entire sacrifice is made by partner X, and therefore premium for goodwill will be paid by W to X. But let us see whether it is correct or not. So 2/6 minus 2/6. Here 2/6 and here also 2/6. It is 0. And for Z it is 1/6 minus 1/6. Again it is 0. So if you are observant enough, then you can cut down your workings. So entire premium for goodwill will be given to the partner X for sacrificing. Now one more thing, calculation of new capital balances. Now W is bringing an amount of rupees how much? 50,000. Okay. W is bringing rupees 50,000. 1 represents 50,000. Therefore, this one will also represent 50,000. And 2 will represent double of 50,000. That is 1 lakh. And this 2 will again be 1 lakh. So, W is 50,000. And let us go reverse. Z will also be how much? 50,000. And then Y will be double of 50,000. That is 1 lakh. And X will be also double the 50,000, that is. So it means what? It is 1:1:2:2. So these are in the profit sharing ratio based on new partner W's capital. Now let us go for partner's capital account. Because current account is also given in the question, and therefore partner's capital account is fixed in nature. So only capital balances we will write here. So by balance brought down, as given in the balance sheet, it is 1,75,000 and rupees 1,50,000 and 1,25,000. And by bank, W is bringing his portion of capital, that is 50,000 rupees. Now, new capital balances we have to set, and it is said that and the difference will be maintained in current account. So to balance close down, as just now we have calculated, it is 50,000, then 50,000, 1 lakh and 1 lakh. But the debit and the credit amounts are not balanced. You see here it is 1,75,000 here. So balancing figure will come rupees 75,000 here. Here it is 50,000. You can understand the balancing figure, you see. But here it will be, here again 1,25,000 minus 50,000 will be how much? 75,000. So this difference in amount will be maintained in current account. So current account of X 75,000, current account of Y 50,000, and current account of Z is again 75,000. So this is how partner's capital account is to be prepared. Now let us prepare partner's current account. In partner's current account, first we will write by balance brought down. It is 4,000 credit balance and 6,000. And for for Y, there is a debit balance because it is given on the asset side. It is 7,000 rupees. Then general reserve is there. In old profit sharing ratio, 15,000 in 3:2:1 is 7,500, then 5,000 and 2,500. Then there is profit and loss account also given in the liability side, and 3,500, and it is 2,333 and 1,167. And premium for goodwill, X is the sacrificer, so entire premium brought by partner W will be given to X. We are not preparing current account for new partner W because no transaction is related to W. And transfer from capital account, it is 75,000, 50,000 and 75,000. That's it. Revaluation loss is there. Revaluation loss of rupees 4,475, 2,983 and 1,492. Now we will calculate the balancing figure, that is to balance close down. So grand total of Z is 84,667. The balancing figure is 83,175. For Y it is 57,333. Minus these two amounts, it is 47,350. For X it is 1,05,000 minus 4475, it is 1,00525. So that is how current account is prepared. Now let us prepare the balance sheet of the new firm. So in the balance sheet we will write capitals of partner X, Y, Z and W as we have calculated. One lakh, 50,000 and 50,000. It is 3 lakh. And current account balances also of X, Y and Z. It is 1,00525, then 47,350, then 83,175. And grand total here is rupees 2,31,050. Now looking in the balance sheet, there is creditors. And is there any change related to the amount of creditor in the revaluation account? There isn't any. So we will write the same figure, that is 1,25,000. Now coming to the asset side, land and building. Of rupees 1,75,000, and related to this the amount is how much? New revalued amount is rupees 2,10,000. And plant and machinery, has increased 74,250. Then comes furniture, reduced by 16,000, it is now 64,000. Investments, it is 29,200, it has reduced by 20%. Then debtors are of rupees 60,500, but because a bill receivable discounted is dishonored, therefore it will increase by 7,004 rupees, and it is now 67,504. After that, stock is at rupees 1,09,600, reduced. Fine. Then comes bank. There was a balance of rupees 43,500, and the new partner has brought rupees 50,000 as his capital and rupees 15,000 as premium for goodwill. And because of dishonoring of bill, 7,400 rupees has been deducted due to dishonor of bill receivable. And now the new balance is 1,01,496. Now that much is the balance sheet. We will grand total it now. It is rupees 6,56,050. So this is how the question is to be solved. I hope that you have understood it very well, and I hope that you have watched the full video and have listened to the explanation here. If you find the video interesting and informative, please like it and share it with your friends. Do subscribe this channel. Thank you so much for liking, subscribing and sharing this channel. And thank you so much for watching this video.